Okay, this is part two of part one of many parts. This is part two of our videos today. Now, this is expected for me when I'm watching the day because normally I want to start watching the market at 7. I leave everything here happen. But also, if you combine what we can term as overnight range, those entire two sessions, right? They're what? They're now the strategy is simple. We have moved up. How far up do I expect us to move? Because I'm printing a data what candle from here from 6, okay, up to somewhere like 4, okay, for 14, for 45 or 5, right? That is where it stops. It is a 23 candle, 23-hour candle. Okay. It takes 23 hours to print this candle. If you combine, you eyeball this, don't you see that this one is a smaller range compared to this? Hmm? So this is my what? Is consolidation. And what did I expect to happen? Consolidation. After consolidation, what will I expect? Expansion. Okay? We expanded, then later we expanded the opposite. Hmm? Why? Then what happens here? Above there. Remember what I told you? Above here, what is there? There is what we call liquidity. Hmm? In what form? Previous session, what? High. It is taken out during when? During New York time. Hmm? Right? New York session started here. It goes, there was news. Hmm? NFP was there because it was the first, like it is the first Friday because today, Friday, 3rd of July, it is a holiday, is a bank holiday in the US. So they moved the news to Thursday. So this Thursday is working as if it's the first Friday of the month. Okay? They moved the news right there. Then what happens? They came, they claimed that high. Okay? They took it out. I love to see. Then, you see this? Now, that is a rate or manipulation leg. When they traded back here hmm, and they closed, you see this candle? That candle, that one, it gave us a confirmation of this entire rate. This one becomes our manipulation. Okay, the moment this candle closed like this qualifies to be a manipulation leg. And this manipulation leg in terms of prices, price phases, that was expansion. Okay. Now this completes expansion move opposite. So in actual sense, what has just happened, the move that went up from here at this level, it is already recovered, right? Hmm? Now what has just happened, we expanded, now we expanded opposite. This becomes what? A reversal, right? But what has just happened, what happened to previous session highs? We have raided what? Liquidity, right? This is what you normally find at open. What happens? That is what I call buy side liquidity. Hmm? Now, if this buy side liquidity is taken out, hmm, my target, immediate target is this. Now, this one, this takeout, this blow out of this is now engineered liquidity down here. And this is what? Previous session what? Low, right? Exactly that what happened. So here, you just find yourself enter and your easiest target is right here. Okay, but if you pay attention, this is now expansion leg, right? What is this? What is that move? What happened there? This is the retracement, right?
Preparing for another expansion.
Exactly. We retraced back into what? This is what? This is order block. You see these opposing candles. Now, this candle, hmm? Now, talking of PDRs, when we talked about PDR matrix, I gave you what I called the order blocks. We will start the entire fleet of order block related PDRs. Order blocks can be amplified. You see this candle that is in this range, this one, hmm? That is what we will study as a rejection block. It is the last candle, hmm, when the move started coming back down. Okay, this one is also a rejection block. Okay, the this one works as a rejecting point to go where? To go into the opposite side. Okay, then when we talk about PDRs, because PDRs they are reference to prices, but right time came in when we'll be analyzing. You see this one, hmm? That time is what there is what you call a micro, okay, which is associated with what? Time. When the right time comes, this is also a micro. Here there is another micro. The price changed. Okay. Now, this move here, you see this candle? Hmm? You see that? It has a name in our matrix, in our PDR matrix. Okay. I was paying attention to that. Even on 1 minute, I was just paying attention to that. Is it going to inverse? Okay. For example, if you waited to trade this confirmation, this entire order block, this one, the type of order block here is called change in state of delivery. Or this one, you could use this as your change in state of delivery. You waited, your entry will come the earliest maybe here. Okay. But if someone used this one, this is what we're going to refer to as inverted fair value gap. You notice it pushed us, hmm? But then immediately we started trading below the consequence encroachment of it. The moment this guy went and got rejected, okay? Also, this candle, this entire candle, you see that? Hmm? It can also be referred to as order block. Order blocks, they're going to be like opposing price. You see this one is the last green candle up into this move. Then you started moving down. Now, this candle, if you pay attention to entire candle, now let me use it entire. You You see the consequence encroachment, the midpoint. Now that the center of that kind of order block is going to be referred to as mean threshold. Mean threshold. Mean what? Mean?
Threshold.
Yes. So the mean threshold is like the center of blocks. When you hear me using breaker blocks, order blocks, rejection blocks, apart from a rejection block, everything else is because a rejection block has a longer wick. Now, the center of that wick, mm, now that is going to be referred to as consequence encroachment. Mm. We are on the same candle, but we can choose to look at it differently. That's why knowing a lot can affect you both negatively and positively. So you need to choose that here. Maybe you would have used what? Order block instead of a rejection block. Now the order block traders marked that low. That you see because the candle opened, traded up, then closed somewhere here. Hmm? Back inside. Then this one tried to trade up. It failed. That is the first indication that we're doing what? We are reversing. Now, when we talk about types of candles, this is what I'm going to teach you as a reversal candle. But you notice that this candle has a longer wick on one side, but this one, yes, has a longer wick, but with a bigger what? A bigger body. Now, this candle is what I'll teach as expansion what? Candles. And another type of candle, you see this candle? You see this candle? It has longer wick on both sides. Now that is what we refer to as indecisive what? Candle. Same as this. You see this one is indecisive because if you pay attention to the wick up and the wick down, this one is bigger than the body. But also this one is very close to the size of the body.
Is there a candle between them?
Uh-huh.
Yeah.
Yes, this is a candle itself. That one is a candle. It is indecisive. You can't say that the buyers were stronger or sellers were stronger if I use that auction language. Okay? Basically, they balanced. It's more like incisive candles. You can also call them like kind of consolidating candles. Both sides balanced. Okay? But when you pay attention to this candle, you see, this has a clear body. You can say body. These are distribution candles. And the distribution candles intraday, they'll be used to study a concept called what? Called displacement. You can see clear displacement. Okay? Hmm? Uh-huh. So I was telling you, this candle took us up. This one did what? It started the reverse. So rejection blocks are going to be formed at reverse what? Points. Hmm? You don't have to catch this entire high for it to be profitable. Okay? If you trade like this, maybe you got this run from around here, came down with it. Your target is already prepared. Now, when we blow out this, because this is what? Consolidation relative to this. Hmm? Okay, this is expansion. But what happened here? We manipulated. Manipulation, they give us what? A reversal stage of price. So, what we do every day, we have to see these things happen. All candles are printed this way. Okay? And if we emphasized phases, you see this expansion, this consolidation can happen entire day. Now those are days we will call those are days we refer to as seek and destroy days. Okay? And we will study them to know when do you anticipate such days. You see, like this day, it was expected to be like this. Okay? Actually, this one was even much better because it is also expansion. But if you look at, just a moment, I'll use this. I'm trying to get open price there. What happens? Hmm? this one is going to give me a better price explanation. Phases price market. This is we opened at this price level. See this there.
How do I say?
How do I say?
When the candle opened from down or up, how do you differentiate?
Now, how do I differentiate the colors that I see here?
So
Because
green
this is a green candle. The green candle opens low and close up. Okay. This is how the candles print. Now, the candles specifically, I'm going to teach them in a concept called the power of three. Okay. I'll explain exactly where it opens and how it closes. But it is more like to know that the candle is the upper candle, the opening price is lower than closing price. You see, this is 30,502. That is the opening price. Then closing price is, you see, that 13 is bigger than 2. Exactly. So that is high opening. But then a candle like this, a green candle, I want you to pay attention. The opening price is 20. The closing price is 16. Are you saying that it closed where? Down. That is how you know. Okay. That. And now there's something which is really interesting. Now, if I don't attach phases on sessions, and I just come my eyeball this, don't you see that this one is a clear consolidation? Hmm? Now, if you highlight that, that is a consolidation phase of price. At this level, I said to you that the market can retrace back into order block that formed during this consolidation, or use what? Equilibrium. You remember? You see this candle? This to me is an order block. We cut through candles. If you pay attention to that, what happens when this guy closed down there? You notice that speed? It gave away. That order block, it can be used for your entry. If I wanted to enter a sell there, this level will work as my entry, and my stop loss is going to go slightly up here. Okay. And I can target multiple times. Either I can say 2R, or I say, I see. We can run back into what? I look for something like these lows. You see that? That is a good place. So it means after consolidation, what do I expect? Expansion. After this expansion, what can I have? Retracement. And then what? You see? Now, pay attention. You see this? Is also a consolidation phase of its own. Just eyeball it. Look at the center of it. But also what I can add on to measure, how do we measure retracement? Like the dealing range is going to save us here. What I do, I'll measure that. I want to see the retracement, if it is really valid. I don't want them to trade beyond 62%. It has to remain, because now this is the dealing range. This is your expansion move. When they start trading back, how do you trace how far they can retrace? We're going to use our fib tools. Okay, I can use all these tools, but at the end of the day, I want to measure. You notice that if I measure here, did they get to 60%, more than 60%? You see where they went? Now, this move, when it started, plus me looking at this consolidation, you see this area? When they retrace